What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do provide also current events. And you can follow me at Hemi137, as I do provide daily updates there as well to give you the pulse of the market. So let's go ahead and bring up our handy scrap sheet here to kind of go over what we've seen over the past week and what we can expect in the coming week. So, as of right now, something I've always talked about is during this time period, you're not going to get a lot of information. It'll start getting quieter and quieter the more you progress into December, and then you get into the last 2 weeks of the year, going into the new year. So essentially, December, Christmas week, and then the week after that, the New Year's week, the market gets pretty quiet because of the fact that again, everybody's on holiday, so the volume dies down a lot. This week, the next 2 weeks, we might, if we're going to get any kind of movement, it will be in the next 2 weeks. We do have some big things going on over the next 2 weeks that could potentially help move the market as well. But ultimately, understand as of right now, things are. We've had a lot of bad news, and the market just has not sold off. The market is manipulating. I should say the Fed or the market makers have essentially been manipulating the market and with the yield curve control and buying bonds. And this is again one thing to keep in mind. Something I did talk about in my daily videos is that one thing you need to watch out for is Argentina did the same thing, right? And understand that our essentially our inflation could have got out of hand back when it hit last year, when it hit 9%. Obviously, that's give or take a lot. But given the way we do our reports, it hit 9%. But nonetheless, they we essentially surpassed Argentina on a lot of different aspects in that front when it came to inflation. But the problem is we didn't print our way out of it. Argentina tried to print their way out of it, and they hit hyperinflation. We are continuing to buy our own debt, which is helping bring down some aspects. It's also helping with our GDP, is what we've noticed over the past week. With GDP is gone up. It was at 4.9. It's jumped to 4 or 5.2 coming into this last GDP. And again, that's very misleading because of the fact that we still are spending out of control, and our spending won't stop. Now, for as far as production can get there. That's why there's been such a big hype in AI and robotics. But the problem is it's not quite there. You still got quite a few years before our production really kind of matches the kind of spending habits that we currently have of as of right now. So, but there's that essentially that expectation there, especially because you can see that in Nvidia, in what Nvidia is doing, because they are the infrastructure for what's about ready to come in the next couple of years. And so again, a lot of the same stocks, just a Magnificent Seven, are going to be the ones that are going to hold up the market, and that's just the way it's going to be. It's innovation. Innovation will essentially pull us out of this, and that will include crypto in any kind of technology stocks. Will essentially pull us out of where we're at. And the innovation that they create with AI and robotics will help with the production and helping people become a lot faster in producing these numbers. And so, with that being said, again, there's still a lot of heavy manipulation when it comes to the GDP. Over the past week, we haven't really got a lot of information. Like I said, the information is kind of just more so waiting on what next will happen. And again, ultimately, I understand we are waiting for headline news. If anything is to happen, we are seeing prices come down on houses. We are seeing prices come down on automobiles. I don't think it's the bottom at all. I think there was a lot more to come here in the new year. I think we're going to get the worst of it coming into the beginning of the new year, and then I think things can have an uptick towards the back half and start pulling us out. Now, it's not going to be a huge boom out of it, I don't believe. I think there are some things that may potentially boom, but ultimately, I think overall, and like we've seen over the past 2 years, is that the rest of the market, aside from the Magnificent Seven in crypto is pretty much just garbage. And we're losing a lot of companies, and we're seeing the banks backstopping, or we should see the Fed and Treasury backstop all the banks, and then we've seen all the banks starting to consolidate and remove a lot of branches that aren't necessary and reducing risk. Again, because that pressure needs to be put on essentially small business, and be able to do that, you got to be able to backstop the banks so you don't lose your support system, and then be able to again shift that pressure onto small business, which in turn will shift pressure onto essentially the consumer at that point. So with that being said, let's go ahead and get started with weekly recap. And so the weekly recap, GDP comes in at 5.2 above the 4.9 expected. Again, that's heavily manipulated in a lot of different aspects. Things are obviously much worse than what they are. People, again, if you look around, people are looking, there's a lot of different ways people are trying to save money in general, and they're still working. None of that has changed. And I said none of that will change until interest rates are essentially get cut from this point. Spending habits, again, out of control. People are just buying. They don't care anymore. And so this is why you're continuing to see a lot of spending continuing to happen, but eventually it's going to catch up. So at some point, you can only spend so much before things get bad. Something I pointed out last week, we did have a big Black Friday sales numbers in Cyber Monday, but only to find out that a mass majority of it is buy now, pay later. So again, you don't really get dinged for the buy now, pay later unless you miss a payment. But if you miss a payment, then it goes up a ridiculous amount of numbers, and then your credit score gets really dinged. So it can be quite detrimental to be try and use buy now, pay later. So we'll see what happens there. But core PCE falls to 3.5, in line with expectations. We also had unrealized losses of investment securities held by U.S. banks hitting $684 billion in Q4. So ever since the pandemic has started, we have been in a very dark spot for banks, especially because the banks having to hold any kind of additional assets was waived because of the pandemic. And then now they're trying to put everybody back on the specific requirements that you're supposed to have in the bank. So again, their banks are in a very tough spot. This is why you're seeing consolidation in branches because of that fact. So that is the banking crisis is definitely not over. It's still alive and well. Every cycle we've lost a bank. Even this last cycle, we still lost another bank. Now you're getting bank branch closures. So you can see that it is still very much affecting banks. But again, none of this is really affecting the market because of the fact that, again, we are essentially purchasing our own bonds, our own bad debt, because nobody else wants our debt. And so this is what's essentially skewing, again, the GDP numbers, again, skewing a lot of different things, and making it look like everything's okay when in fact it is not. But even being said, something I've stated before is that the market can continue to do this and perhaps even push this into over past the election before anything actually happens. But being said, there's some other additional things here I'll get to in a second. But Apple shut down its credit card partnership with Goldman Sachs, so that's something else added to the fact that Apple doesn't want to have anything to do with any kind of banks, especially right now. You're seeing all the issues that are happening with banks. Apple doesn't want to be a part of that because Apple's actually doing extremely well despite current circumstances, and despite the past year, they've been absolutely horrible in earnings. But they have tons of money in the bank, and again, they prep for situations like this. So they have tons of cash at hand that they can continue to do this for quite a while. So being said, they don't want to have that risk at hand, so they essentially shut down that partnership with Goldman Sachs, and rightfully so. And then this is the thing I wanted to point out here is that interest rates futures are now showing cuts beginning in March of 2024. They were predicting out in July, and then it started moving up closer and closer and closer. Something I've talked about because I've been mentioning baseline February, March as it typically one of the biggest dives in the market in general to start out the year. And then from that point, the market kind of resets and then pushes back up from that point. So with that being said, what we're currently looking at here is we have April is supposed to be the Bitcoin halving. Typically, there's a big dip in the market just before the halving. So it kind of is all following in line with around that February, March time period in which things are going to get really bad. We're going to have a hard reset. And then at that point, we could go into full recovery mode at that point. But this is something I want to really iterate and state here. The market as a whole is not going to go back like it was 2 years ago, right? If you go back 2 years ago, when we printed 40% of the money supply, everything was in a bubble. It didn't matter what you bought, it went up. That is going to change. There's only going to be some industry leaders that are really going to lead this thing, like we've seen with the Magnificent Seven and what we've seen in crypto. We're already seeing what the leaders are going to be in the next couple of years, right? The rest of the market is going to struggle, and the rest of the market is you're still going to lose a lot of businesses in this whole situation, especially with interest rates being high. They're not going to come down quickly. Again, if they come down too quickly, then you start getting back into inflation problems. And you're going to have to start raising rates again, which is something we should be expecting to happen. When they start cutting, you have to realize if inflation starts screaming back, they're going to have to start putting increasing rates again. So this is going to be something that's very long and prolonged. It's not going to be very easy at all. So you have to keep that in mind. This is going to be a pump the brakes, a little bit of gas kind of situation going on here. But again, if we can find the top ones, and this is again why I trade a lot of the beta stocks, because these are the front runners are going to lead essentially our economy out of this with AI and with robotics to help boost production numbers. And then eventually, when everything catches up, then a lot of these other stocks will start doing better again. So these are things you just need to, again, keep in mind. So again, we're trying to set up for next year. So we are, again, looking around that April, March time period is when things could start recovering going into election. Again, there's a lot of manipulation going around election year as well. So you have to keep that in mind. But being said, we are setting up for a potential turnaround next year. Again, it's going to be very gradual. It's not going to be the stock market, the Magnificent Seven and crypto may rip out of there during March. We don't know for sure, but I believe they will going forward. But again, that's not going to be everything. So don't just expect everything, but we'll take it day by day, right? This is why I don't like to project too far ahead, because we don't know. Things will change very quickly in this type of market, especially if there's any kind of crash. Again, you got a lot of different houses, you got a lot of different automobiles. Prices are starting to come down. So that's great to see. But again, the Fed, we did have Powell over the past week too, and he was saying that they are nowhere. It's too premature to start talking about rates, which makes me believe we got only a couple months before that does happen. So March, again, everything would line up with March, April time period. So again, we will watch and see what happens there. So as far as upcoming events, again, our scheduled events is going to be very small moving forward. Again, there's still earnings going on, so just keep that in mind. But I don't post a lot of the earnings at this point. None of them really are going to impact the market that much. We're more so just waiting on headline news, if anything, at this point until the next earnings cycle. So again, all we have is non-farms this week, which I think is going to be a very big aspect in rates. And so this is why it's going to matter and has probably the most weight out of anything that we've seen thus far, because we are starting to see a decline in essentially recessionary type numbers. And we're going to look at the revisions from the last one where it dipped well below expectations. And so again, they've still been skewing the numbers to make it look like things are better. But if you look back, we've been on a very, very steady decline, that things are going down, as opposed to this, again, narrative that things are strong and resilient, which they are not. And we've seen that living day by day. Prices are coming down in some aspects. But again, understand that things are still bad. And as long as those interest rates are held where they're at, it's going to put a very big strain on small business, which means more people are going to get fired, which means more people are going to have to dip into other different aspects to essentially accommodate for that as well. So with that being said, that's pretty much the only big event we have this week. And then next week we do have monetary policy and core. Those will be big, but not as big as non-farms. I think, again, non-farms are going to hold the most weight because that's going to really kind of dictate what happens with what's going on with rate cuts. And I think, again, we're still too early. I think March is probably a really good time period around that time. Again, baseline is around that time when things were really bad anyway. So it's just funny how the timing all plays out to around that time period between February and March when the market normally dips heavy anyway. And then as far as the watch list, we have an uptick in SPX. I think that's highly due because of non-farms. Just shows you the amount of weight it has. Again, if you have a big scheduled event, it normally affects the index. If you have earnings or anything like that, it'll affect the individual stock. And so Tesla's been moving a lot. Tesla's been selling a lot. Elon's been in the news over the past week as well. So he was saying multiple things during the week too that was that essentially put a lot of pressure back on different businesses that were advertising on X. Walmart actually is not advertising on X now as well. So a lot of people, he was mentioning comments about Disney. A lot of people, a lot of subscribers stopped subscribing to Disney and Hulu because of the comments that Elon was making. So again, there's going to be some volatility there just because Elon's name's been in the news. Cybertruck also just came out this week. So there's going to be a lot of hype that will continue into this week as well. Probably see a lot of people with Cybertrucks. Might see a lot of haters out there posting a lot of bad stuff about it as well. So that all that is essentially kind of priced in for this week for Tesla. So this Tesla's still high at 12. And you got BA still sitting around 6 as it's been kind of on the move in the upside. And then the banks, JPM still sitting at 3, which really hasn't done too much. So that's what we have there. Let's go ahead and get into the SPX. Now, I wanted to make this because a lot of times, a lot of my information is more just about the pulse of the market. And so for this particular video, since we are starting to get into this time of season where it's a lot more quieter, I want to start talking about like technical wise, like we are way too high. And this is something I say, you shouldn't be taking trades every single day. You know, you get some really good trades, you won't have to trade for months. And so this is the kind of approach I've always tried to take, is to be very calm in the market. You don't always have to take a trade. If the market is bad, if you find like you're getting too many bad trades, you need to sit out and reanalyze everything. And I've learned that throughout the years, is that you have to be patient for the setup. If the setup's not there, or what is called a plus setup, you just don't take it. And as of right now, you've had this parabolic move, right? Like we hit the range, which was around that 4,100. We just jetted out of there because of the fact we are, quote unquote, officially paused, which I said, we have about 2 to 3 months in which we would run if we are officially paused. And so we're kind of playing into that narrative as of right now, which would lead us into January. Potentially some really bad news would hit that could potentially start selling off the market, which again, that next earnings cycle could give us great insight into where the consumer is. That's what the Fed is waiting for. Again, a lot of things are just lining up for that to happen. So again, you want this thing to be able to set up for you. And one thing I don't like about this market is it's very, very news based. So even though it hit this range, it lasted a day. And it was out of this, and it just bulleted out of this. And this is why events matter, because if you hit a range and you know there's an event, very well, because you can get moves like this as well. So looking back at charts helps with this, and understand, okay, well, there's an event today. If this market pops out of here, right, this could be the bottom of this, and you could catch this crazy wave up. And so looking back at previous events and know what event caused this was a pause, and it was right around 4,100. So it popped straight out of it, and then that was it. But again, we are hitting we are still at the top range here. So that battle for 600 we were fighting it all day Friday, even with Powell kind of pumping the market, right? And you have to again understand We've had Fed members since this point pumping the market almost every single day. They've been on the news and pumping back up to 4,600. Again, so if we're officially paused, it's been almost 2 months since official pause. So again, coming into January, February, that's going to be some interesting a time period in which January starts right here. So it'd be an interesting time if the market doesn't want to start pulling back. Again, we are only roughly about 213 points away from all-time highs again. 213. I think if we do break the 4,600, there is a very, very strong possibility that we will see all-time highs. And so these are things you have to keep in mind moving forward. And so again, even though I'm very cautious about what's ready to happen, because I still believe that we will hit that reset and we will correct. We haven't priced in a recession, and that's the concern. And so I don't want people, again, not financial advice, but to jump in here after this. That's not the point. You jump in, you wait till you have a nice pullback, at least till 4,300 before you even consider jumping back in. You don't jump in up here when you could potentially just wick in a day and then it gets brought back down to start selling off, right? Unless you got a really tight stop right here. That's the last thing you want to be doing. You want this thing to have a healthy pullback into some better ranges for you. This is why I like supply and demand, because you have stronger support levels here that you're watching. Then if you know there's a news event and you're coming into that zone, that could be this move, right? That shoots us back up. And if you caught it here because you knew there was an event and bought it, had a tight range here because you've been seeing selling coming in heavy to this range, right? If this thing typically drops 2 zones like this, that means that's a very, very good buy point, right? And so even here, if this dips down to the 44.50, that could be considered a zone, like a speed bump. I like this one better. So if it dipped down to here, this would be a much better zone to buy in because it's been going up. So the first dip, you're going to at least get a nice bounce out of it. If it doesn't want to hold, right, you're following the stop right here, so it doesn't break below the 43.50. And then if it gets up here, you can move that stop up because it may be a higher low and then may continue to start ripping up. So nonetheless, again, these moves are because of this market. This market is very much event driven and very dynamic in that fact. The market normally is very dynamic, but even more so now because data points are very sensitive right now. So again, this is why I like trading the way I like to trade, because of the fact that the zones will tell you where it's at, and then having and knowing what event is occurring can help with plays like this. So again, we are watching to see what happens this week. This week will be important. If we can't break above that 46, we may just be coming back down or continuing to chop. We chopped here for about a week before we even got that. So non-farms will be big. So if we can't break above that starting on Monday, we may just see ourselves coming back to 45.50 and then waiting for non-farms. And non-farms are bad, we could see ourselves back at 4,300. But again, I think if we do break 4,600, right, I think there is a very strong possibility that we're going to see all-time highs. And this, if it breaks up here and starts ripping, I can guarantee you at that point it's pretty much almost a just buy, because nothing at that point is going to make any kind of sense. Things are bad, but again, you have to remember that essentially we are purchasing our own bonds. That is not going to stop. We are not going to give up having the world dollar dominance over the world just to anybody, right? We will do whatever it takes to keep that status. And so this is what you have to keep in mind. And so this is essentially what this whole move has been. And again, be very careful, because on average, if the yield curve is inverted, and we have essentially been on pause for 2 months now, at any point, well, actually, if this is 2 months, so when was this, back in 10? Yeah, so the 2 months could be right dead, and so you have to be very careful in this. You still have to be very cautious, even though I just said buy. You definitely want to be cautious because you are coming into that window in which we would start pricing in a recession. And then when a recession starts getting priced in, again, that's normally around a cut. So uh, again, but we'll see these levels and see where they're at come on Monday before we get too ahead of ourselves, because there's a lot of different scenarios that could potentially play out. And again, if we want to look at it just technical wise, we want to see what happens with this 4,600 coming next week. If we can break or hold, or we drop back down below that. Drop back down below that is putting the odds in a bad position in which we might actually be coming back down to at least the 4,350. So again, we'll see what happens there, but that's what we're looking for there. As far as like Bitcoin is concerned, Bitcoin's been essentially monster tear 40. Talked about this months ago that this thing could rip up, even when we were back here, that it could rip up to the 40K mark. Could be a strong possibility, so just keep that in mind. Whoops. But with that being said, we'll see what happens there. So as far as Bitcoin is concerned, again, very parabolic move. We want this thing to naturally pull back at least to the 30K, and it hasn't even done that yet. So again, I still think there's news on this that is going to drop. Again, Bitcoin's been known to drop heavily months, like a month or two before having. So just keep that in mind. Again, everything is aligning right around February. Right around essentially the new year earnings for Q4 earnings reported for Christmas. So those are things we want to really be watching there and see where the market goes from that point. So we'll continue to watch this. Again, if it does break this 40K mark, the next mark essentially will be 45. Otherwise, this thing could start pulling back. It needs to hold roughly that 30, at this point, 34 now. Does break that, could see it 30. So this is, again, why I'm watching these levels and seeing where we go from there. So we'll see what happens there. This is another big thing, too. I'm going to pull up gold. So this is concerning. The only time gold really runs is if there's worries of a recession, right? And gold really doesn't do anything unless there's really some heavy concerns, and gold's actually pushing up. So that's what's interesting to watch there as well. So you need to keep that in mind. It's coming, it's essentially at this top range here as well. So if it does break out, you can see gold really start screaming up. So we'll watch that. TLT, your bonds are actually could have potentially hit a low back in October, and now it's starting to push up. That means it's getting closer to rate cuts at this point. So this thing could really start exploding when you start hearing the Fed actually cutting. When they start cutting, this will definitely be the play. But we don't know for sure if that's the case or not just yet. We are quote unquote officially paused, but that again could change very dramatically. So we'll continue to watch and see what happens there. Tesla. Now, Tesla, again, has been heavily in the news with Cybertruck, with Elon Musk. So there's been a lot of back and forth. So we're going to have to see how this does play out here. But a lot of chop. So again, my zone is roughly around that 200. I really like it back down here. It's still another higher low. So this thing could potentially make another push back down to 200. I think is, again, a very strong possibility. We'll wait and see what happens there. Again, I think there's still one more move down before we get this thing all situated and before we can start pushing back up. I think it's still very much a strong possibility of that happening. But again, you have to understand that the whole atmosphere is going to change moving forward. You're not going to have all industries just continue to push up like it did 2 years ago, and it didn't matter what you bought, it just went up. We had a bubble 2 years ago because 40% of the money supply. That is not so much going to happen this time around. There's still going to be a lot of industries that are still be suffering a lot in the next couple of years, and will take time for them to progress. But there will be industry leaders that will actually have some bigger moves, like the Big Seven and anything essentially associated with even potentially commodities moving forward, just because of what's currently going on and the potential threat also with China and Russia and, with the whole AI situation. So we'll continue to watch this and see what happens, but we are going to be getting in earnings mode here. So we'll see if this thing can eventually flush back down below the 228. Again, watching that 200. If it does dip down here, I do want to try to get this around this level. because I think it's going to get some sort of pump back up into earnings cycle. Again, about 3 weeks, and then it started pumping back up again. So looking for this thing to come down one last time before potentially making that last run before. Again, we have the bigger event around that February-March time period. So, watching this one closely. Palantir is also the same kind of situation. It's been moving just like. Sorry about this. Things jumping all over the place. So Palantir has been moving just like Tesla a lot. So this thing actually dipped back down below 20. It's been really struggling around here. So we'll see if this thing can dip one last time to the 14. Kind of looking to see for that for one last earnings cycle. It did really good for earnings and just been kind of moving sideways since. So we'll see what happens here. But really watching Palantir as well. I just want to bring up Apple real quick. So Apple's in a situation where it's topping out, just like the market in general. So if the market, again, very parabolic, like this isn't healthy. It's just going to lead to another bubble and a break, especially after a lot of bad earnings that it's had in general, not just siloing that even individual earnings and realize where things are actually currently at. So again, we'll see what happens here, but again, it needs to break above that $200, else this thing is coming back down to, I mean, it could even tag here and bounce right off here at the 181. I obviously would like it much lower than that, but we'll see what happens. Meta, it's starting to lose steam. A lot of these big seven are starting to lose some steam, so it'd be interesting to watch to see what happens here. Google's been selling off heavy this week as well. So a lot of these are starting to look the same as far as tech. That's where a lot of the strength has been. So if we start losing some strength in there, we have seen an uptick in value and in financials. So that's one thing we want to keep an eye on. So if you look at BA is just not respecting any of these reporting resistance anymore. It's just parabolic. That's what I'm saying is we are not respecting any kind of any charts or patterns or anything like that. So essentially, this is why, again, I like supply and demand, because even though it may not respect these levels very well, you still see some resistance against these and testing the level 1, 2, and 3 before it breaks out, and then test the 1, 2, and then 3 and breaks out. So, but again, still very parabolic. So we're still kind of watching to see if it can break back over this 240. Otherwise, I think it's going to at least pull back to the 215 here, and then I'll see if it will hold that. If not, again, massive sell-off, and then just all of a sudden everything's okay, and then just rip right back up. So again, we'll watch and see how this does play out. So, but BA is showing strength. We also got JPM, which is showing strength again. Again, just complete vertical out of here, like nothing ever happened. Like we started selling off on bad news, and then everything's all right, and just whipped around and started ripping back up again. Now this needs to break out of the 180, 158. Otherwise, this thing could be headed back down to 141. So again, this week will be very, very important to distinguish which way we're going to go over the next week or two before we end the year. After that, I think we're just going to kind of chop around until we get to the new year, till we get to the new numbers. So again, something interesting to watch the next 2 weeks. So we'll do that. And then we have that big event on non-farms. That's, I think, our last really big event. Before, obviously, we'll have monetary policy, Powell, and we'll have another core before then, which, again, I don't think anything's going to happen with monetary policy. I don't think Powell's going to say anything different, especially at the last month of the year. I think more so it's just waiting on what non-farms are going to say on Friday. So I would think that we would at least remain chopping until Friday, and then if something happens on Friday, that could potentially break us out and make us go to all-time highs, or it could push us back down. It does have the weight to do that, I believe. So we will wait and we will see. So if you made it this far, I do appreciate you. Go ahead and drop a like. And until next time, I'll see you guys later.